Welcome to XM.com. You're watching the Daily Market Comment for Wednesday, May 4th by Mario Sagikyriakos. I'm Christina Marujos. The Federal Reserve is almost certain to raise interest rates by 0.5 percentage point today and outline plans for shrinking its gigantic balance sheet in an attempt to rein in inflationary forces. Markets have already fully priced in the half-point rate hike, and similar moves are baked in for the next three meetings, which would bring the federal funds rate to around 2.4% by September. It won't be easy for Powell and his colleagues to surpass market expectations. The bar has been set quite high, with more than 200 basis points of rate hikes priced in by September. Going any faster could snap something, whether it's the bond market, housing market, or a stock market swimming in leverage. The Fed wants to avoid panic. There are reasons to be cautious too. Several indicators suggest economic growth is losing steam, financial conditions have tightened rapidly, inflation expectations have stabilized, and the appreciating dollar will serve as a weapon in the fight against inflation. Bearing everything in mind, it makes more sense for Powell to strike a balanced tone, highlighting the concerns about inflation but also emphasizing the risks around growth, especially with Europe and China stalling too. This might disappoint some US dollar bulls who expect Powell to be super hawkish today. Hence, the greenback might finally take a step back today. That said, this is likely to be a counter-trend move, and the overall picture remains positive. The dollar became king by riding a perfect wave of rising US rates, risk aversion, and slowing growth in other major regions. Until these dynamics begin to change, it's difficult to envision a trend reversal in the dollar. There wasn't much movement in the broader FX market, with most pairs closing the session around their opening levels as traders waited for the FOMC meeting to provide some clarity before taking new positions. Stock markets, however, were livelier. The S&P 500 closed higher by almost 0.5%, which was likely driven by investors covering some short bets ahead of the Fed. The bar for a hawkish surprise today is quite high, and if Powell simply strikes a neutral tone, that could come as a relief for the bruised equity market, especially for beaten-down tech shares. Meanwhile, energy is back in the spotlight after the European Union announced a ban on Russian oil that will be phased out over 6 months. Oil prices spiked higher, although it's debatable whether this changes much on a global level. Thank you for watching the Daily Market Comment here at XM.com.